By mid-2025, Venezuela's economic crisis has dragged on for over a decade. Once an oil powerhouse, the country now faces deep stagnation and fading hopes for recovery. Daily life is a struggle for millions, shaped by economic challenges. 5 key indicators reveal the depth of the crisis: GDP, inflation, unemployment, credit access, and government debt. GDP has collapsed, inflation remains rampant, jobs are scarce, credit is nearly non-existent, and government debt is crushing. These factors are tightly linked, creating a cycle that's hard to break. Recent data from 2024 and projections for 2025 show little sign of improvement. The numbers aren't just statistics. They shape the lives of families, businesses, and the nation's future. For Venezuelans, these issues are about survival, not theory. The urgency for solutions is real, as the cost of inaction grows daily. Experts debate the path forward. Some call for political change, others for economic reforms. The international community watches, but help is limited. The crisis is not just economic, it's a test of resilience and hope. Is recovery possible, or will stagnation persist? This exploration will uncover the real impact behind the numbers. The stakes are high and the need for answers is urgent. Let's examine the heart of Venezuela's economic struggle. GDP measures the size of a country's economy, how much it produces in goods and services. In Venezuela, GDP has shrunk dramatically, with the economy losing over 70% of its size in the past decade. In 2024, growth was barely positive, around 1% after years of steep decline. Projections for 2025 and 2026 remain bleak, with growth expected to hover between 0.5% and 1.5%. This stagnation means the economic pie isn't growing, it's barely holding together. Businesses struggle to survive, leading to closures and job losses. Investment has dried up, few want to risk money in a stagnant economy. The government collects less tax, so public services like hospitals and schools deteriorate. Roads crumble, hospitals lack supplies, and teachers go unpaid. For ordinary Venezuelans, this means fewer jobs, lower wages, and declining quality of life. Young people see little future, and many choose to leave the country. The shrinking GDP fuels poverty, inequality, and mass emigration. It's not just a number, it's a daily reality of scarcity and hardship. The dream of prosperity feels more distant than ever. Every sector, oil, manufacturing, agriculture, has been hit. The cycle of decline continues, with no clear end in sight. GDP's collapse is the foundation of Venezuela's economic crisis. Without growth, recovery is impossible. The challenge is immense, but understanding GDP's story is the first step. Inflation means your money buys less every day, and in Venezuela, it's a relentless force. After years of hyperinflation, 2024 still saw inflation rates in the triple digits, around 180% to 250%. Even if inflation moderates, it's expected to stay above 100% in 2025. Prices double within a year, eroding any sense of financial security. Wages can't keep up. A month's salary might last only a few days. People spend money as soon as they get it, before it loses more value. Savings are wiped out, and the bolivar is often replaced by the US dollar, if people can get it. This creates a two-tiered economy, deepening inequality. Businesses can't plan or set prices, and shortages are common. The government's price controls often make things worse, leading to empty shelves. Inflation acts as a hidden tax, hitting the poorest the hardest. It fuels social unrest and deepens the crisis. For most Venezuelans, inflation is a daily battle for survival. The instability discourages investment and production. The cycle of rising prices and falling incomes seems endless. Inflation is not just an economic issue, it's a destroyer of hope. Breaking its grip is essential for any recovery. Unemployment in Venezuela is widespread, with millions out of work or underemployed. Factories have closed, businesses have downsized, and government jobs pay too little to live on. Official unemployment rates are high, but the real numbers, including underemployment, are even worse, possibly affecting 30 to 40% of the workforce. Job creation is stagnant, and projections show little improvement ahead. The lack of stable work frays the social fabric and pushes families into poverty. At the same time, access to credit has all but vanished. Hyperinflation and government policies have crippled the banking system. Loans are scarce, and interest rates are sky-high or unaffordable. Small businesses can't expand, and families can't get mortgages or emergency loans. The economy relies on cash, stifling investment and innovation. High unemployment and scarce credit trap the economy in stagnation. Without jobs or credit, recovery is nearly impossible. Venezuela's government debt has soared to staggering levels. over $150 billion by 2025, much of it in default. Years of borrowing during oil booms left the country vulnerable when prices fell. Now Venezuela is cut off from international financial markets and can't borrow to fund recovery. Debt payments consume future revenues, leaving little for health, education, or infrastructure. Default damages the country's reputation and scares off investors. The debt crisis complicates relations with international organizations and creditors. Any recovery plan will require complex debt restructuring, a long, difficult process. Until then, debt hangs over Venezuela like a dark cloud. It limits every option for growth and burdens future generations. Solving the debt crisis is essential for a new beginning. Behind the numbers are real people facing daily hardship. Maria, a former bakery owner in Caracas, closed her shop as costs soared and customers vanished. Now she sells snacks from her apartment window, earning a fraction of what she once did. Her story is echoed by countless small business owners crushed by inflation and low demand. Carlos, a public school teacher in Maracaibo, says his salary barely buys food for a few meals. Many colleagues have left the profession or the country. He walks miles to work because he can't afford transport. Isabella, a university student in Valencia, sees little future in her field. Her professors have left, labs lack equipment, and friends are emigrating. She searches for online work, hoping to save enough to leave too. These stories are not isolated, they're the reality for millions. Maria's closed bakery reflects GDP collapse and inflation. Carlos's struggles show the human cost of hyperinflation and shrinking state revenue. Isabella's uncertainty highlights unemployment and lost opportunities. These voices reveal the urgent need for real solutions. The crisis is personal, not just statistical. Hope is in short supply, but their resilience endures. Venezuela's crisis is a web of shrinking GDP, runaway inflation, mass unemployment, scarce credit, and crushing debt. These problems feed each other, creating a vicious cycle. Breaking free requires bold, credible reforms, monetary stability, fiscal discipline, and economic diversification. Reviving the oil sector and investing in new industries are essential. Political stability and the rule of law must be restored to attract investment. International support and debt restructuring will be vital, but only if reforms are real. The path to recovery is long and difficult. There are no quick fixes. Rebuilding trust, institutions, and hope will take time. The alternative, continued decline, is unthinkable for millions. The urgency for action is clear. The world watches, hoping for change. The question is, will Venezuela's leaders and people seize the chance for renewal? The future depends on the choices made today. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.